A very good morning, students. So welcome to the Shrestha taxation classes. In the last class, we have completed discussion regarding income from salaries, right, sir? So totally out of the 5 heads of incomes, we so far completed 3 heads: income from house property, capital gains, and income from salaries. Okay, ma. Now let us moving on to the next head of income, that is income from business or profession. And we generally call it as PGBP, profits or gains from business or profession. Okay, ma'am. Now let's have some, uh, come to the running notes once. So open in a fresh page, put the main heading, chapter number 6. Chapter number 6, income from business or profession. Now, sections covered here from section number 28 till section number 44 dB. 44 dB. So these are the range of sections covered in this chapter now. That is income from business or profession. Now let us take down the list of important sections from this chapter. List of important sections. So as usual, you all know that the very first section of every chapter deals with the charging section. So section 28 is a very important section. Charging section. And then section 32, which deals with depreciation. And already we had some brief knowledge about the depreciation, which we have learned in the chapter capital gains, along with section number 50, right, sir? Sale of depreciable capital assets. And then after that, section 35, section number 35, scientific research expenditure. Scientific research expenditure. And section 35 AD, capital expenditure incurred towards specified businesses. Capital expenditure of specified businesses. And then section 36(1), section 36(1), other deductions. Other deductions. And next section 37, section 37, miscellaneous deductions. Miscellaneous deductions. And then section 40 small a, disallowances. Disallowances. And then section 40 capital A2, expenditure found to be excessive. Expenditure found to be excessive. And then section 40A3, cash payments greater than 10,000 rupees. Cash payments greater than 10,000 rupees. And then after that, section 41(1), a refund of expenditure, and then section 41 for a recovery of bad debts, and next section 43B deductions allowed on actual payment, and then section 44AB tax audit, section 44 AD, 44 ADA, 44 AE, presumptive taxation. So these are the list of important sections we are going to be learned from this chapter, right here. So the list is very big because the chapter is very big, as simple as that. Section 28 to section 44B DB, that is the range of sections we are learning in this chapter, and the list of important sections. Section 28 charging section, where we are going to learn about what are the different incomes taxable under this head. Section 32 deals with depreciation, right here. And what is the normal depreciation, what is the reduced depreciation, what is the additional depreciation, all this we are going to be learned. Unabsorbed depreciation. 35 scientific research expenditure, right? It is a section 35 series, 35.1, 35.1 clause 1, 35.2AB. All this we are going to be learned in this topic, scientific research expenditure. 35 AD capital expenditure of specified businesses. We have a list of 14 specified businesses. With respect to that 14 specified businesses, how the capital expenditure is going to be allowable as deduction, that we are going to be learned in the section 35 AD. Then 36.1 other deductions, 37 miscellaneous deductions, 40 small a disallowances. In 40 small a, the most important sections are 40 small a clause 1 disallowances with respect to non-resident payments, 40 small a clause 1a disallowances with respect to resident payments. Then 40 capital A2 expenditure found to be excessive, and 48.3 cash payments greater than 10,000. 41.1 refund of expenditure, how we are going to deal with the refund of expenditure. 41.4 recovery of bad debts. 43B deductions allowed on actual payment. There is a list of 7 to 8 payments, 7 to 8 expenses where the deduction is allowable on actual payment, irrespective of method of accounting being followed. And 44AB tax audit. What do you mean by the tax audit? To whom it is mandatory? What are the threshold limits? If tax audit becomes mandatory, what we have to do? Everything we are going to learn in 44AB. Then 44AD, 44ADA, 44AE, which deals with the presumptive taxation provisions with respect to residents. Okay, now, right? So these are the list of important sections. Now let's have a brief introduction to this chapter. Introduction. So we have the some basics. What do you mean by business? What do you mean by profession? Right? So let us see. Business, the term has been defined in section 2 clause 13 to include any trade, commerce, manufacture, or any adventure or concern in the nature of a trade, commerce, or manufacture. Sir, you have already learned the definition of business in your +1 +2 levels, sir, intermediate. Right. And profession, the term profession includes vocation. That is the definition of profession. Profession includes vocation, and this is defined in section 2 clause 36. Profession means if a person carries on any activity on the basis of ability and knowledge acquired out of a professional study, degree, or diploma. Sir, we are called as professionals because we are doing a professional course called chartered accountancy. Doctors are professionals, lawyers are professionals, engineers are professionals, because they have done a particular professional degree or professional course. So that's why they are called as a professional. And we are rendering services to our clients on our professional capacity because we are possessing that qualities. We are possessing that capabilities. We are having that ability to render the professional services. And how we got that quality, capability, and ability? By doing the professional course. Now, in order to become a vocational person, if a person carries on any activity on account of inbound talent, skin, and attributables, right? On account of inbound talent, skill, and attributes, vocations. Like, sir, I'll give you an example for a vocational person. Vocational person means here, you can take all the so-called gurujis, so-called babajis, so-called sons, right? We have seen so many kind of babas like Swamijis like Nityananda Swami, right? Dera Baba. Yes or no? Right? They themselves, announces like we are the gods. Yes or no? Right, sir? See, here you may have follow them, you may not follow them. You might be the devotees of that Babajis, Swamijis, right? I respect your opinion, but uh, I'm just taking them for this example only, because what they are doing, sir, they are telling some, they have learned certain things from Bhagavad Gita. They learned certain things from, Quran or Bible, and they spoke about the Bhagavad Gita. They spoke about the Quran and everything, and they themselves pretending like they are gods. Yes or no? See, if they are telling something which we don't know, it doesn't mean that the other person is a god, right? They're pretending to be the god. They're pretending to be the goddess. They will do some magics, and they will announce like, they have been sent by the god. They are the agents of the gods, right? You have seen all these kind of gurujis, swamijis, babajis, and you better very well know that their incomes, their assets, thousands of crores they are now owning. Where they get it? Yes or no? So even the vocational income is also taxable, sir, right? Taxable as professional income. Of course, whether it is a business income, whether it is a professional income, whether it is a vocational income, everything is taxable under the head Pgbp only. Okay, now next. So you can see here, sir, it is not material whether a person is carrying on a business or profession or vocation. For the purpose of assessment, profits from all these sources are treated and taxed alike. That I've already told you, sir. Next, business necessarily means a continuous exercise of an activity, right? See, business doesn't mean to be, it should be in a regular course. It should be there in 24/7, 365 days. You should be engaged in that activity, not required. You can see profits from a single venture in the nature of a trade may also be treated as business. Example, crackers business. So crackers business is a seasonal business, sir. Hardly it will be having the season for 6 months in a year. Hardly 6 months in a year, sir. Because generally whenever there is a Diwali festival, then only there is a demand for crackers. Yes or no? Right? And Diwali festival falls in the month of either October or November. So those who are engaged in this crackers business, they will start manufacturing from the June or July month onwards. Right, sir? And they will do this business from July, August, September, October, November, December, January. And January also only in the up to January 1st, New Year celebrations. That's it. Once the New Year celebrations and everything gets completed, then no one will purchase the crackers in it. The demand will be very less. Right? It's okay. Even they are doing this business for a 6 months, it is said to be they are engaged in the business, and whatever the income they are getting from that particular business, that will be taxable under the head Pgbp only. Next. So this is the introduction to Pgbp, sir. Next, moving on to the charging section, section number 28. Right, sir. Now, sir, so far we have completed 3 heads. Income from house property. And what is the charging section, sir? Section 22. And what is the charging section, sir? Right, it starts with the word, the annual value of any property comprising of buildings and lands appertaining thereto. Right, taxable under the head income from house property. Right, so it's a matter of 2 to 3 lines, and we have taken hardly 1 hour to complete that particular charging section. Next, and after that we have learned capital gains. Any profits or gains arising on transfer of a capital asset shall be chargeable to tax under their capital gains in the year of transfer. Section 45. Do you remember? Hardly we also completed that in 1 hour, sir. And then after that, we have seen income from salaries. Right. Section 15, charging section. Any amount due to or received by the employee from the employer chargeable to tax under the head income from salaries. Matter of 2 lines. We completed in hardly half an hour. But Pgbp charging section is a very lengthy charging section, sir. It takes at least 2 hours to complete the discussion. It will be having clauses like you can see here, section 28 clause 1, and then you can see here section 28 clause 2, compensation, section 28 clause 3, then section 28 clause 4, section 28 clause 5, and like this you will be having up to section 28 clause 9. So totally there are 9 clauses in the Pgbp charging section. So let us start with one by one, sir. So look at the first clause. The following incomes are chargeable to tax under the head Pgbp. First one, the profits and gains of any business or profession which was carried on by the assessee or on his behalf at any time during the previous year shall be chargeable to tax under the head Pgbp. So whatever the profits and gains you are getting from your business, from your profession, which is either carried on by you or on your behalf. Suppose that I am residing in here in Chhattisgarh right now, right, sir? But I am doing a business in my native place, Warangal, from the Telangana state. So I have a family business there. So my family members are taking care of that business, right? But the business was registered on my name. So whenever a business was registered on your name, there is no hard and fast rule that you only should involve into that particular business activity. Not required. You can do the business activity through representatives, through agents, through employees. Yes or no? Right, sir? Okay, now. So that's why either carried on by the SSE or on his behalf. At any time during the previous year, this is a very important point, sir. At any time during the previous year shall be chargeable to tax under the head Pgbp. Okay, now, so the importance of at any time during the previous year, I'll tell you in few minutes. Okay, now look at the focus points here. Profits may be realized in money or in money's worth. So the profits may be in cash or maybe in kind, right? Both are taxable. Both are taxable. If the profit is realized in any form other than cash, then the equivalent value in cash of such profit or income shall be taken. If the profit arises in the form of a kind, you got an asset, then that asset fair market value you have to take, and that shall be your profit. Next, capital receipts are not generally to be taken into account while computing the profits under this head. See, this point we have already learned in the introduction to income tax. Revenue receipts are always taxable unless otherwise exempted. Capital receipts are always exempted unless otherwise taxable. Do you remember, sir? There we have learned also the difference between the revenue receipts and capital receipts. Yes or no? Let me take you to that particular point. Components of income we have discussed. Yeah, important concepts relating to income. Here, I think I've taken out that particular provision. Yes. I might explain that provision orally, sir. It was not mentioned in my material, but orally I have explained that. Right. Capital receipts are always exempted unless otherwise taxable. Revenue receipts are always taxable unless otherwise exempted. Right now. Next. And what are the circumstances where the capital receipts are taxable? That we have already learned in the capital gains, and in this chapter also we are going to be learning some places. Okay, now look at here. So capital receipts are not generally to be taken into account while computing profits. Next, any person carrying on the business or profession was benefited from some other person who is under no obligation to pay anything at all. Look at this example. If an amount paid to a lawyer by a person who is not his client, then the amount so received shall be accessible as the lawyer's income. Like, sir, assume that you are the lawyer and you argued a particular case on behalf of your client and you won the case. You won the case. And you received the fees not from the client, from the client's brother. See, actually that client's brother is under no obligation to pay the lawyer's fees here. Yes or no? Right? But the client's brother pay you the professional charges to you for arguing that particular case in the court. Will you take that amount or not? Definitely we will take, because see, we are argued in the case, we have discharged our professional services for which we are receiving professional charges. And it is irrelevant that whether you are receiving from your client or whether you are receiving from any other person. What you all need, your professional services charges. Yes or no? Suppose that you argued in the court, right, on behalf of a subsidiary company, and you won the case and you received the money from the holding company. Will you take it or not? Definitely you will. Yes or no? See, ultimately what is the important point here is whether we received the business income or not, whether we received the professional income or not. That is what ultimately important. Are you following? See, whether you are receiving from the concerned person or not, that is irrelevant. Next, income from illegal business is also equally taxable. Illegal income is taxable as, you know, as equal to legal income. The income tax department is least bother about legality of income. Have you earned is the least concern of the income tax department. Whether you possessing any income or not, that is what ultimately matters to income tax department. Whether you are doing a smuggling, whether you are earning this income by selling drugs, that is a, you know, that is a duty of the other departments, not the duty of the income tax department. Clear? Next, the profits of each business of the assessee shall be computed separately, but the assessment shall be made on an aggregate basis. Like, sir, I'm doing 3 businesses, ma'am. Textile business, cotton business, and, you know, some departmental stores business. Now, while I'm calculating the profits, I need to calculate separately. What is my profit from textile business? What is my profit from cotton business? What is my profit from departmental stores? But when the assessment is happening, while you're calculating your total income, Pgbp means the total of all these 3 businesses. Okay, next, the charge is on the profits, that is on the income net of all admissible deductions, but not on income. Right, sir? See, by doing the business, you have earned an income of 1 lakh. Now, are you going to pay tax on this 1 lakh? No. For earning this income, you might have incurred some expenses. First, claim all that expenses as deduction. Claim all that expenses as deduction. And then whatever the income left over, that is your profit. Sir, for the purpose of earning this 1 lakh rupee income, I've incurred an expenditure of 40,000. Okay, 40,000 just deduct it from your income. After claiming deduction of all your expenses, whatever the income left over, that will be your profit. And only the profits are liable to tax here. See, in profit and loss account, when you're preparing the profit and loss account, you know, you will take the gross profit, right? On credit side, on debit side, you will book all the expenses. After booking all the expenses, whatever the ultimately left over net profit, and that is the income on which you are going to levy the tax. Are you following or not, Amma? Only on the net profit, that is your income from business or profession. Next, the illegality of the business, a profession or a vocation does not exempt its profits from tax. That a point I've already told you, sir. Next, income from business is taxable under the head Pgbp. Yes, but we do have some exceptions, ma'am. What are the exceptions? The first one, rent from income from house property. This you can strike it out, sir. Because recently we have a judgment that if a person exclusively engaged in the business of letting of properties, in the business of letting out properties. Now, whatever the rental income he is getting by letting out property, whatever the rental income he is getting by letting out properties, it is always taxable under the head Pgbp only. Earlier, this rental income is used to be taxable under the head house property, Amma, right? But if that person's business, business itself letting out of properties, He's buying the properties and letting out, buying the properties and letting out. So that is what is business activity. So letting out of the properties, giving the properties and rental basis is his business activity. Then the rental income is always taxable under the head Pgbp. Okay, next. And after that, dividends. Dividends and winnings exclusively taxable under the head income from other sources. Nowhere it is taxable. Whether it is a domestic company dividend, whether it is a foreign company dividend, both are taxable under the head income from other sources only. Sir, I am holding the shares and securities as my stock in trade. Still, dividends are taxable under the head income from other sources. Sir, buying and selling of securities is my business activity. I'm a trader. Still, the dividends are taxable under the head income from other sources only. Next, winnings from betting, gambling, lotteries, crossword puzzles, all these taxable under the head income from other sources only. Sir, I am a professional gambler. Now, whatever the income I'm getting from a gambling, since I'm a professional, will it be taxable under the head Pgbp? No. Gambling income always taxable under the head income from other sources only. Are you following or not? Right? So winnings from lotteries, bettings, gambling, card games, crossword puzzles, TV shows, races including horse races, all these are all always taxable under the head income from other sources only. Right, sir? Next. Business or profession must be carried on by the assessee during the previous year. Yes, come to this point. See, we have been taught in the charging section that in order to levy the tax on business or professional income, that business or profession should be carried on by the assessee or on his behalf at any time during the previous year. So that means that business might have been or must have been carried on by assessee or on his behalf at any time during the previous year, even if it is for 1 month. Then the income arising out of that business activity taxable under the head Pgbp. Right, sir? So the condition is that the business must be in existence, must be carried out at any time during the previous year. Are you following or not, Amma? Now, let me explain you here one example. Section 28, clause 1, we are discussing, Amma. Section 28, clause 1. Look at this example, sir. Mr. X, a practicing chartered accountant, adopted a receipt basis of accounting, for the purpose of calculation of his professional income. Ma, what is the method of accounting applicable for Pgbp? The same method of accounting applicable for income from other sources. The same method of accounting applicable for Pgbp. What is that? Accrual basis or receipt basis, whichever is regularly followed by the assessee. So the option is given to assessee. The assessee wants to follow the accrual basis of accounting. Yes, he can opt for accrual basis of accounting. If the assessee wants to declare his profit or professional income under receipt basis of accounting, yes, he can do so. The option is given to assessee. Okay, now. So here the assessee adopted receipt basis of accounting. Right, sir? Now, as per the principles of receipt basis of accounting, only the actual receipt should be considered. Receivables should be ignored. Okay, now for the previous year 2019-20, by rendering his professional services to the various clients, he rendered almost 1 crore worth of professional services to his clients, but he has not received a single penny from the clients. He said to his clients like, okay, I will render the professional services to you, don't worry, but the professional charges you need not pay immediately. As and when I have a financial requirement, then I'll ask you, then only you have to pay to me, right? The clients are very happy. They are receiving the services. Anyhow, they are not paying the amount immediately, right? Now, sir, now my question is, what is the professional income taxable for the previous year 1920? The answer is nil. Professional income taxable for the previous year 1920, nil. Why, sir? He rendered 1 crore worth of professional services. Correct. So the 1 crore should be considered as his professional income under the head Pgbp. No. Why? Because he is following receipt basis of accounting, and as per the receipt basis of accounting, only the actual receipts should be taken into account. And what are the professional receipts during the previous year 1920? Zero. Right? He received not even a single rupee from the clients, because he already been given instructions to the clients. So if department asks him, sir, yes, I am following the receipt basis of accounting and my professional receipts for the previous year 1920 is zero. So that's why my professional income is zero. Next. During the previous year 2020-21, he rendered professional services worth 2 crores. Worth 2 crores. Right, the clients got doubled because they have given the information to their friends and relatives. There is a chartered accountant who will provide the services, but not asking the money immediately, right? So we can take the services from him for the timing at free of cost. So more and more clients come forward. So this time he rendered 2 crores worth of services. In the financial year 2021 also, he followed the same receipt basis of accounting. And again, in this year also, he given the instructions to the clients. Okay, dear clients, hope you enjoyed my services, but I'm not asking you to pay the money immediately. Whenever I'm in a financial crisis, I'll ask you the money, then you'll pay. So clients are again happy. Now, my question is, what is the professional income taxable? What is the professional income taxable for the previous year 2020-21? Answer, nil, zero. Because again, he followed the receipt basis of accounting. Again, he has not received even a single rupee from his clients. So his professional cash receipts are zero. So hence, nothing will be taxable under the head Pgbp. Even if the department asks, the client will repeat the same story. Sir, instead of, I've asked many times to my clients had not paid anything to me, sir. I am following receipt basis of accounting. My professional receipts are zero. So I'm not liable to pay any tax. Now, sir, during this previous year, on 31st of March 2021, Mr. X surrendered. Mr. X surrendered his COP, Certificate of Practice. Mr. X surrendered his COP, Certificate of Practice. He quits the profession. He surrendered his COP. Now, during the previous year, 2021-22, though he quits his profession, he was very busy. He was busy in collecting the professional charges. Now he started calling to his clients. Okay, clients, it's time to pay the money back. So I'm in a financial crisis. I quit my profession, so I need money immediately. So he started collecting the money from the clients, and he collected all the 3 crores. 1 crore belonging to financial year 1920 and 2 crores belonging to financial year 2021. So professional charges collected 3 crores. Now the department was very happy. Finally, he got the money from the clients. Immediately, department issues notice to the Mr. X. Okay, Mr. X, we are very happy to know that you received the money from your clients. So we have been waiting for your income tax since last 2 years. Finally, the day arrived. So please pay the tax on your professional income of 3 crores. And Mr. X given the reply, okay, I'm ready to pay the tax, but which provision of your income tax act 1961 making me liable to pay tax on this 3 crores? You just tell me the section, I'm ready to pay the tax. Immediately the department said section 28, man, you are carrying your profession. And as per the provisions of section 28 clause 1, any profit and gains arising from the business or profession shall be chargeable to tax. So the department given the reference of section 28 clause 1. And immediately assessor replied, okay, dear department, please read out section 28 clause 1 thoroughly. What section 28 clause 1 saying? Yes, profits or gains arising from the business or profession shall be chargeable to tax, but there is a condition. You just follow that condition. What is the condition? That business or profession must have been carried by the assessee or in his behalf. Sorry, ma, some technical disturbance. What section 28 clause 1 saying here? That business or profession must have been carried on by the assessee or on his behalf at any time during the previous year. You might have forgot this provision. Look at here. During the previous year, 2020, 21-22, I've collected professional charges, correct? But where I have carrying on my business? Did I carry my profession? In the previous year, 21-22, not even for a single day. The last year itself, I've surrendered my COP. In the last year itself, for the previous year, 21-22, I am not a chartered accountant and I have not carried out my profession even for a single day. Then how come my professional charges are liable to tax? Your provision only saying now. Your provision only saying that it must have been carried out by the assessee or on his behalf at any time during the previous year. Now, during the previous year, 21-22, I'm not into my profession. Then how come my professional charges are liable to tax? The department is silent because whatever talking by the assessee is absolutely correct. Are you following or not? So even for the previous year 21-22 also, the assessee has not paid even a single rupee as tax liability. Right. So in order to overcome this loophole, this is a drawback. This is a loophole in the section 28 clause 1 only. In order to overcome, cover up this loophole, they come up with some clarifications. Look at here, ma. Right. So the main provision is that the business or profession must be carried on by the assessee during the previous year. This is a loophole. And they come up with some exceptions like section 41, section 41 deemed income, sir. This we will discuss later. Okay, now. Right, we have a section 41 series is there. There we will discuss in a detail. Next, 176(3)(a). Look at here. Any money collected after the discontinuance of the business will be chargeable to tax in the same manner and to the same extent as if the business was in continuation. 176(4) chudandama. Any money collected after the discontinuation of the provision will be chargeable to tax in the same manner and to the same extent as if the profession was in continuation. Right, sir, here they will say that in this case, yes, what you said is correct, SSC, but look at the exceptions. We have amended the provision. Look at the provisions of section 176(4). As per the provisions of section 176(4), if the assessee received any money with respect to discontinued profession in a latter year, the year in which that amount received, we will take the assumption that as if you are carrying your profession. Okay, you are saying that during the previous year 2021, you have quit the profession. Right. For 21-22, it is a discontinued profession, but you received money in relation to this profession now. So that's why for the previous year 21-22, we will take the assumption that your profession is in carrying. Your profession is in continuation. So by taking that assumption, now the department will tax this professional charges of 3 crores. Right. Continuing the same example, like, if you are doing a business, you have been in business for 10 years, ma'am, and after that you quit that business. In the 12th year, you have received some bad debts from that business. You have received some uncollected money from that business. So after the discontinuation of the business, you have received something in relation to that business. Now, whatever the income you have received in the previous year in which you have received it, for that previous year, the department will take the assumption that as if the business is still continuation. A business inka continuation lone undi an assumption తీసుకొని taxable చేయడం జరుగుతుందమ్మా. Are you following or not? So this is section 28 clause 1. Check it out, sir. Just go through this clause 1 and ask the doubt if any, sir. Completed, sir. Now moving on to the section 28 clause 2, compensation. So basically here we are going to learn about capital receipts now. Capital receipts. So the general rule is that capital receipts are not taxable. But there are certain instances, even though it is a capital receipts, it will be taxable. What are that instances? We are going to learn here. Look at mom. So compensation, normally a capital receipts, but there are certain receipts by way of compensation which are taxable under the head Pgbp, which are as follows. First one, compensation received by any person by whatever name called managing the whole or substantially the whole of the affairs of an Indian company or the affairs in India of any other company at or in connection with the termination of his management of office or the modification of any terms and conditions relating thereto. Suppose that you got a contract to look after the business activity of an Indian company. Sir, you are not an employee of that company for your kind information, right? Outsourcing on a contract basis, right? So you got a contract to look after the affairs of Indian company, that business activities, right, of that particular Indian company. Sir, here assume that the contract is for 5 years, right? And suppose that if you are working very well and you are running that business in profits, the contract will be continued till 5 years. Assume that the management is not satisfied with your services, right? So then what the management did is it has terminated the contract, right? So by paying you certain compensation within the first year itself, they are not satisfied at all with your services, right? And they are not satisfied at all with your management skills, right? So then they terminated the contract by giving you a certain compensation, and that compensation is taxable under the head Pgbp. See, if the relationship between you and the company is an employer and employee, that will be taxable under the head salaries. That is why I've said at the beginning, you are not an employee of that particular company. You got that contract on outsourcing basis, right? Next, any person by whatever name called holding an agency in India for any part of the activities relating to the business of any other person at or in connection with the termination of the agency or the modifications of any terms and conditions relating thereto. Look at here example. B was the distributor of the company for entire northern India. He was a whole and sole distributor of that particular company for entire northern India. Later, the company has modified the contract of agency, limiting the coverage only for Delhi. Right. So you're not having that capacity to look after the entire northern India. So better you just look after Delhi only. So there is a modifications in the terms and conditions of agreement. Earlier, you are the whole and sole distributor for the entire northern India, but now only for Delhi. So modifications. For modifying your terms of contract, yes, the company will pay you certain compensation, and that compensation taxable as business income. So for that, the company be compensated with rupees 5 lakhs, and such amount shall be taxable as business income. Next, compensation received by any person in connection with vesting to the government or any corporation owned and controlled by the government of the management of any property or business. Suppose that I am doing particular business, sir, right? Sir, I am doing, I have a petrol bunk, right? So let us assume that I have 10 petrol bunks in that particular area. Now, in order to control the prices of the petrol, let us assume, right, the government came to me and asked my business, right? Okay, SSC, we would like to take over all your 10 petrol bunks, right? Tell me how much you want. So we are taking over all your 10 petrol bunks businesses. So take this compensation amount, right? See, in order to reduce the prices, sometimes the government, take over the businesses. Like even if you take the examples of pulses, onions, in order to control the prices of that particular pulses and onions, for the time being, the businesses of that particular persons will be taken over by the government. And then it will control the prices. And once the prices comes down to its normal range, then the businesses will be, returned to the business persons. So whenever you are vesting and giving your business undertaking to the to the government, right? Now, whatever the compensation in relation to compensation you're receiving in relation to transferring of that business to government. Now that compensation is always taxable under the head Pgbp. Right. Next, any compensation received or receivable, whether in revenue or capital, in connection with the termination or modification in terms and conditions of any contract relating to its business, shall be chargeable to business income, shall be taxable as business income. Right, sir. So this is a miscellaneous provision. Point number D. By taxing the compensation received on termination of an agency or on the takeover of management, which is a capital receipt, as income from business, section 28 clause 2 provides exception to the general rule, that is capital receipts are not income taxable under the Pgbp. So the general rule is that capital receipts are not taxable, but the exception is provided in section 28 clause 2. So here these are all capital receipts. These are all capital receipts, but we are taxing under the head Pgbp. Are you following or not? Next, section 28 clause 3. Section 28 clause 3. Income of any trade or professional association from specific services rendered to its members. Further, it is not necessary that the income received by the association should be definitely or directly related to such specific services. So what do you mean by the specific services? Look at here. Specific services are those services which are available even for members only on the payment of the prescribed fees. Let us take the example of the world's richest professional organization, ICAI. Right, sir? Institute of Chartered Accountants of India, it is conducting some seminars. Example, it is conducting some seminars. Are you following or not, Amma? So for conducting the seminars, ICI will charge a certain seminar fees. Even we are being the members, in order to attend that seminars, we need to pay the money, sir, seminar fees. So here the professional association rendering some specific services to its members, but not at free of cost, Amma, by taking certain money. Are you following or not, Amma? So by rendering the specific services, let us assume that there is a seminar on, GST, the latest developments and the latest amendments by the Finance Act 2021. So there is a seminar on GST, right? And the seminar fee is some 1,000 rupees per member. Let us assume that by conducting that seminar, ICI is collected some 5 lakhs rupees. Now, whether the entire 5 lakhs is taxable? No. For conducting that seminar, ICI might have incurred some expenses now. Booking of the hall, that means the hall rent, the maintenance expenditure. So providing the, food, snacks, tea, coffee to all the members who are attending, and, the honorarium paid to the members who have taken the lectures, right? Photography expenses, advertisement expenses. I assume that all these expenses comes out to be 3 lakhs. So by conducting the seminar, it has collected some 5 lakhs rupees as seminar fee, and out of which 3 lakhs it has incurred expenditure, Amma. So how much is left over? 2 lakhs. Now only this 2 lakhs taxable here as per the provisions of section 28 clause 3. So by providing some specific services to its members, whatever the income it is getting, that income is chargeable to tax under the head Pgbp. Okay, now next section 28 clause 3, to subclause A to E, export incentives. So generally in India, we need to encourage the exports, because by making the export of our goods and services, we are making our goods and services globally competitive. Globally competitive, yes or no, right? And we are making the other countries to seek the help of the India in relation to particular products. Other countries are now being depending on India for certain products and services. We are unique. So this is all possible and happening because of the exports. So that's why in order to encourage the exports, see, even by doing the exports also, we are getting the foreign currency reserves only, which are always scarce in India. In India, foreign currency reserves are always in scarcity. In order to overcome that scarcity, then we need to do the exports. See, if you do the exports to the US, you can collect the money in dollars. If you do the exports to the Britain, you will collect the money in pounds. Are you following or not, Amma? Right. So these are all the advantages of exports only. So that means in order to encourage the exports, we need to encourage the exporters, those who are doing exports. So what are the advantages and benefits we are providing to them? In the form of cash compensatory support. What do you mean by the cash compensatory support? Let us assume that there is an exporter, Mr. X. Okay, now. And now the total cost of the production, manufacturing, and everything, including this profit element, the selling price of the product comes out to be, let us say, 100 rupees. Let us say 100 rupees. But for 100 rupees, it will not be having any demand in outside the India, because this product is already have a substitute in the open market and which is available at 80 rupees only. Then who will purchase the similar kind of the product for 100 rupees? No one will purchase. So when a substitute is already available for 80 rupees, everyone will go for the substitute only, which is available at the lesser price. So that's why what the government of India will do is, okay, exporter, don't worry. You just export this product for 50 rupees only. For 50 rupees only, not for 100 rupees. Sell this product in the open market for 50 rupees only. I'll pay you the remaining 50 rupees. Don't worry. So here the government is giving us cash compensatory support for every unit of the export, 50 rupees only. Let us assume that you have received a cash compensatory support of the total amount of 5 crores during the previous year, 21-22. Now the entire 5 crores is liable to tax here. Next, duty drawback. Duty drawback means whatever the export duties you have paid at the time of export, all that export duties you can claim as a refund of export duties. Refund of export duties. So once the export is completed, so you need to provide the some evidence. Okay, sir, my export is completed. This is evidence, and these are the export duties I have paid. Now, whatever the export duties you have paid, you will get all of them as a refund. That is what you call a duty drawback. Then import entitlement licenses, profit on transfer of duty entitlement passbook, profit on transfer of duty-free replenishment certificates. All these are export incentives. All these are export incentives, and all these are going to be taxable as your business income in the under the head Pgbp. Are you following or not? Import entitlement licenses. What do you mean by this? Suppose that if I export 10 crores worth of goods, then I'll get a license. I'll get a license for rupee 1 crore. Now, what is this license? So generally, I've already mentioned you that India is always having the scarcity of the foreign exchange reserves. Sir, if you want to import certain things from the outside the India, suppose that you want to import a plant and machinery, sir. You want to import a plant and machinery from US. You already entered into a contract with the supplier in US. The supplier is ready to give you the plant and machinery, but he is asking the consideration in US dollars only. But you don't have the US dollars with you. So you went to the government of India for US dollars. So give me some foreign exchange. I'll give you the equal amount of money in Indian currency. Give me some foreign exchange. So I would like to import a plant and machinery. But first of all, the government of India must have the foreign currency reserves it with no, right? So if you go for 10 times, the government of India will give you only for 1 or 2 times because it is not having the foreign currency reserves, right? But if you are going to the government of India with this license, import entitlement license, this is the license I'm having where I'm entitled to get 1 crore worth of foreign currency. So that license gives a right that you can ask for 1 crore foreign currency reserves from the government of India. So that's the importance of the license. Suppose that I'm an exporter, I'm exporting the goods, I'm getting this import entitlement licenses, but they're of no use to me because I'm not going to import anything. What I can do is I can sell, I can transfer these import entitlement licenses to those who are in need. Are you following, sir? I'm not having any import requirements, but बगल में एक मैन्युफैक्चरर था, इनको चाहिए, right? He's a manufacturer. He needs the plant and machinery from other countries. Now, what I can do is I can transfer my import entitlement license to him for a consideration. Okay, Mr. X, I'll transfer my import entitlement license to you, but you need to pay me some 10 lakhs rupees. Right. So now by selling these import entitlement licenses, whatever the money you are getting, that will be taxable under the Pgbp only. Are you following or not? Same as the transfer of duty entitlement passbooks, same as the transfer of duty-free replenishment certificates. These are all import incentives, export incentives, and export incentives are always taxable as your business income. Clear? So I'm stopping the discussion here. From class 4 onwards, I'll discuss in the next session, sir. Okay, now, children, have a good day and good night, sir.